Welcome to Turning Hard Times to Good Times. I am Jay Taylor. I'm talking to you from New York City on the first day of September 2020. And I do want to remind you that I write a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. You can sign up for that by going to miningstocks.com. We like to plug Chen Lin's letter, What is Chen Buying, What is Chen Selling? Go to chenpicks.com for that. And we also like to plug Michael Oliver's wonderful letter as well. olivermsa.com is the place to go for that. And we're fortunate to have Michael with us. In just a few minutes, we'll be getting his comments on various important issues. I do want to thank all of you for listening to this show and making it one of the top shows on the Voice America Business Channel. And also, really do read everything you send along to questionsfortaylor@gmail.com, questions, the number 4, taylor@gmail.com. And, of course, we want to thank our sponsors, because without them there would be no show. Our sponsors for this week: Benchmark Metals, NV Gold, Hannon Metals, Irving Resources, Novo Resources, Sitka Goldcorp, Lion One Metals. And I do want to welcome two new sponsors this week, Grand Portage and GMV Minerals. As with all sponsors in this show, these are companies that I have recommended in my newsletter and that I have purchased personally as well. It's a time when we can pick and choose the companies that we have as sponsors, because there's so many good ones out there. With money and capital moving into the gold sector and the mining exploration sector, this is the best time of my life in terms of this industry. There's a lot of other things that aren't so good going around, but the mining sector is certainly one of those bright spots, the precious metals sector especially. In just a few minutes, I'll be speaking to Michael Hudson. He is the president of Hannon Metals. They have a massive sedimentary-hosted copper-silver project in Peru, just absolutely enormous. It's one of those projects that's certainly way beyond what a small junior mining company can handle. I wouldn't be surprised at all if we see Hannon announcing a major mining company coming into the picture sometime. Well, I don't know how soon, but I think it's almost going to happen, because there's so few new projects like this one out there, and that the big copper guys have to have. So keep your eyes on Hannon, and of course, as I say, we'll be talking to Michael Hudson in just a few minutes from now. Another sponsor of mine, Lion One, came up with some spectacular news this past week, providing further confirmation that it is on to a major alkaline gold deposit that is in Fiji. And I'll be passing along some of this exciting information to my readers this weekend in my newsletter. And one of the biggest sleepers, I believe, among my sponsors is Sitka Goldcorp. Now, selling at around 20 cents in U.S., I'm expecting to have Corwin Coe, he's the president of the company, on the show next week with us. But he has a drill campaign going on in Nevada and looking for a Carlin-style deposit, as well as the Yukon. And again, with such a minuscule market cap, these are the kinds of stocks that can just absolutely explode in percentage terms, much, much higher levels. So next week, Corwin Coe, assuming he's available, and I think he will be. And I've seen some naysayers comment about Novo Resources in recent days. Investors seem disappointed that the stock hasn't moved all that much in recent months. But you have to keep in mind that Novo is at that point in time in its cycle. It's made its discovery, and now it's doing the engineering and getting ready for production. The acquisition of a mill recently means that it's going to be moving production time up very markedly. In fact, I think we may start to see some production before the end of the year. What I think most people are missing is the fact that this new mechanical separation technology that has come along is going to be a game changer for Novo. I think for a lot of other companies as well. Dr. Henning has talked about this issue on my show a couple of times, but I really, truly believe that people don't understand how good how robust the profit margin should be using this new technology, and as well the extent and the massive amount of ground and ounces that Novo will be able to come up with in the years ahead. Well, those are my views anyway. I'm not saying that you should go to the bank or you should go and buy the stock right now. Just on my words, you need to really do your own due diligence on all of these companies. But, of course, I try to help you do that with my newsletter. Go to miningstocks.com if you'd like to sign up. I also want to mention my course. Thanks to our son Scott, who suggested, Dad, I think there's a lot of new people wanting to get into this industry, wanting to buy gold and silver and other related products. Why don't you provide a course for them? So I've now completed the filming of this course. I've titled it Investing 101, Gold and Silver in the Mining Shares. And the first couple of courses will have to do with the economic and political events that are taking place not only in the United States but around the world that have set the stage for what I believe is most certainly the biggest gold bull market for gold and silver in my lifetime. The third lesson will talk about different ways that you can invest in gold and silver and the different derivative products that are out there, including the gold shares and silver shares. In the fourth lesson, I'm going to talk about the economics of mining and what you need to look for with these junior exploration companies, because as soon as they start exploring for a project, you have to keep asking yourself, can this be a mine? And then, either make a decision to stay or to get out of that stock based on the conclusions. And then in the fifth lesson, Dr. Quentin Henning, who is the most sought-after exploration geologist in the world, he's provided a very insightful dialogue with me and basically telling us what he looks for before he decides to get involved. There are many companies want Dr. Quentin Henning to be involved with them as they explore and develop projects. Well, he can't sign up with all of them. So what does he look for? What really excites him about a project and causes him to sign on as an advisor to these various companies? And then Chen Lin will also be with me in the fifth lesson. He'll talk about what he uses, the combination of trading and investing to do a remarkably great job in terms of his return on investment. So just a tremendous successful investor over the last number of years since I've learned to know him. The topic of today's show is an unexpected systemic crisis for sure. Alistair MacLeod and Michael Oliver, and as I said, Michael Hudson will be with me today. Now, Alistair stated in his August 13th essay, and I quote, "Downturns in bank credit expansion always lead to systemic problems. We are on the edge of such a downturn, which, thanks to everyone's focus on COVID-19, is unexpected. On March 23, markets stopped worrying about deflation and realized that monetary inflation is the certain outlook. That day, the Fed promised unlimited monetary stimulus for both consumers and businesses, and the dollar began to fall. Commercial banks everywhere are massively leveraged, and their exposure to bad debts and a cyclical banking crisis is now certain to wipe many of them out." End of quote. Well, Alistair will talk about the impact on these market events and the impact on the dollar, and by extension the price of gold. It's denominated in dollars, of course. And he has really focused on the globally systemic important banks, the GSIBs for short. Those are topics that he'll be talking about. Very important. And also I want to ask him his latest thoughts on the digital currencies that central banks now seem to be getting ready to try to implement. So we should be some very interesting discussions with Alistair MacLeod in the second half of today's show. Right after the first commercial break, Michael Hudson will be with me. He heads up, as I said, Hannon Metals, to talk about the wonderful things that are going on down there in Peru with that fantastic sedimentary deposit, a copper and silver deposit in Peru. But right now, I'm really happy to tell you that Michael Oliver is back, and I'm trying to talk as fast as I can so we can find as much time as possible for Michael, because people are out there complaining, "Taylor, you talk too much." Shut your mouth and let Michael talk. So thanks for joining me, Michael.
Hi, Jay. Good to be back.
Yeah, so let's talk about the markets that are really have you most interested right now. The dollar seems to be getting weaker, as Alistair MacLeod mentioned. He says it started around March 23rd. But what are your thoughts about the dollar and then some of the other key markets that we look at?
Well, the dollar is a major bear right now. In fact, it's been a major bear for a handful of decades. If you look back at the dollar index back in the 70s and 80s, it's just big, huge layered declines. And it's resumed. The action of the last 2 months for us convinced us that the major sell signal we issued in early 2017 is back on course. We even did a study of a 10-year average oscillator of the dollar. Normally, when we look at annual, we look at 3-year and that kind of thing. But 10-year. The 10-year says if you drop to 91 cash dollar index, right now it's trading at 92 area. If you drop down to 91 this year, you're likely to drop rapidly to 84.
Wow.
That's the next step. Now, that doesn't seem like a big deal, but in foreign exchange, the major currencies, that kind of percent drop is huge.
Mm-hmm.
It's single digit, but it's huge. So it's effectively a crash type drop. So if the dollar hits 91, I think there could be another rapid drop here. So watch that 91 level. No doubt that'll have impact on other markets or reflect other events that are going on. Gold's behaving quite well. Silver, of course, has come to life like a monster, and we think it will remain the monster of the gold-silver market. We think it will be the leader. Mm-hmm. And I strongly suspect that the two peaks at $50 over the last several decades will come out by next year sometime. And I don't know where silver's going on the upside, nor do I know on gold in terms of ultimately. We're facing a swirly in the world, political, economic, philosophical, monetary, you name it. It's all coming together now. Mm-hmm. And so you can't just look at gold and silver and technically analyze them and say, well, they're going to do this or that. You got to look at the T-bond market, which we think is living on its last leg. So right now I still think there could be one more surge in the bond market as a flight to safety from the stock market at some point here in the next few months. But beyond that, then the bond market looks vulnerable in terms mm-hmm. of lower prices, higher yield. That will be a dramatic scare event if that occurs. Right now, you buy bonds when stocks are weak. Okay, they're inverse. But mm-hmm. if yields ever started to rise on a trending basis, that would be very negative for stocks, and they would be joined at the hip at that point in terms of downside mm-hmm. in price in bonds, downside in stocks. So we're looking for that, but probably that's a next year event. Mm-hmm. The Bloomberg Commodity Index has broken out. Our first breakout level had occurred the end of yesterday, so the end of the month. And we think there's likely a major surge coming in the broad commodity category between now and the end of the year. And by major, Bloomberg Commodity Index right now is trading at 73 area. Now, if you go back and look over the last decade or so, it's been up to 180 or something. So, it's not exactly expensive. We think this surge could go to 110 to 120 very rapidly. Well, you do the math on something that's 70 and go into 120, let's say, that's a huge percent gain.
Yeah, sure.
And we think it could unfold in a matter of, a quarter or two. So, again, for our subscribers, we prescribe very specific numbers that are trigger numbers, and we've hit one of them this last month, and there's another one not far above. And I think that would shock a lot of markets, because I don't think anybody's really looking at a broad commodity upturn. Mm-hmm. They're so used to it being deflated. And that'll affect things like, bond yields. Those people long bonds will have to start to think again.
Well, that's really right. And I wonder, if yields start to rise like that, Michael, then it means the central banks are losing control, I would think.
Over the long end of the market, yes, I quite agree. And I think they will lose control over the long end of the market. They may control the overnight, but that won't matter. Also, if you or continue to be mesmerized like Trump is of the V bottom and the new highs in the stock market, stand back and really look at the stock market. Okay, don't just look at the NASDAQ 100, which is being driven by 6 symbols that comprise 48% of that index weighting that are causing it to go vertical. Look at the fact that the Dow is not making new highs. New York Composite Index is not making new highs. Russell 2000 is not making new highs. The Euro Stoxx 50, the blue chips of Europe, are not making new highs. It's a very narrow event, and it's very delusionary and delusional. Another thing struck me there. How much time do we have left, Jay?
Take another minute or two.
Another minute or two. Pause on this issue. The Caracas, Venezuela stock market is up 1,000% this year.
Wow. Yeah.
Does that matter?
No, not if the currency's worthless.
I mean, the currency, the M2 of Venezuela, is up 1,000%.
Yeah.
So when the Federal Reserve starts to put the pedal and drive our M2 vertically, and it is going vertical, quit paying so much attention to nominal prices if the money unit is being degraded rapidly. Because, no, we're not Venezuela yet, but, we're getting to be some version of Venezuela, and that we're driven by the degradation in the money unit. So at that point, it's possible you could have every asset in the world going up, and it doesn't matter. The issue becomes, for an investor, which assets have least risk and the greatest percent gain potential. Mm-hmm. And we argue it's gold, silver, and commodity category in that order. And the other stuff that's looking good right now is probably either going to lag or actually go down. Mm-hmm. So it's time to put your thinking hat on and not just look at nominal new highs, quote unquote.
Well, you're talking about money and money supply in Venezuela. I would suggest some of the things we're seeing in places like Portland and Seattle and Minneapolis and Chicago and New York and elsewhere around the country looks a little bit like what we used to see in Venezuela as well. But that's another story. Just real quickly, maybe 30 seconds or so. You mentioned when we had you on for a longer period last week that you were quite certain that Biden would win, and somebody didn't like to hear that sent an email in, and I said, well, so what are your thoughts about that? Because I think the polls
my thoughts are that we're headed for the giant swirly of errors that we've been compounded over decades, and especially since 2009. These are financial, monetary, and they're based on philosophical, political philosophy errors. Uh-huh. Okay. Now, they cause real-world consequences. The issue now for Trump is he was suffering badly in the polls. RCP average showed him down 7% or so. That's changing a bit. And what's changing is the fear factor. And the fear factor, of course, is directly connected to the events that are about to unfold. And some of them are going to be violent, and they're going to get more and more violent, I suspect. I'm not encouraging it. I'm just saying that's just the reality out there. And we're seeing it happen. And if those events continue to escalate between now and the election, then the election is a toss-up. Trump might actually pull it out. Now, I would argue this. By the way, Jeff Deist of the Mises Institute made this same point, so I'm in effect echoing what he said. Regardless of the outcome, we're in a crisis. But the Democrats, if they won, it would be more peaceful initially in the first few months after the election. But if Trump is elected, expect violence rapidly. Yeah. I suspect the left is going to explode. Yeah,
well, you would think
in mass if he got elected.
Right. So, given their reaction to the first time he was elected, I would agree with you. All right, Michael. Well, thank you. We'll have to leave it go at that. We're out of time and then some. But thank you so much.